Hello guys, welcome back again to the charts. This is Kajita the Scalp Lord from Silent Pips. Today we'll be looking at how to scalp with the help of chart patterns. Now what's scalping? Scalping is basically getting in and out of the market very fast within very short periods of time. So we'll look at what to scalp and how to scalp it. Under how to scalp, we'll look at chart patterns, and let's start with what to scalp. What should we scalp? It's best to always scalp pairs that are really heavy, or pairs that are very volatile and have a high pip count. For example, indices or GBP pairs like GBP. Let's take a GBPJPY. GBPJPY is a great pair to scalp. You see there are many brokers. Let's choose FXCM, which is one of the rated brokers. So scalping, we must start with the low time frames. You must be scalping basically on low time frames, while not on any high time frames. We'll go to the low time frames, and next we'll try to look at chart patterns. So before we go right there, let's look at how the market moves. You see, the market simply moves like an expansion and a contraction, and an expansion, contraction, expansion, contraction, expansion, contraction, expansion, and contraction. So we'll be looking for contractions and expansions, and we'll be drawing up chart patterns. So that's what we'll be doing today, guys. So let's start by looking at GBPJPY on a very low time frame. Let's go right down to the 15 minutes. We'll be starting from the 15 minutes. So let's identify our expansion and contraction first on this 15-minute chart on GBPJPY. So we'll come here. You can see price gave us a contraction, expansion, contraction, expansion, contraction, expansion, and contraction, expansion, contraction, expansion, contraction. So you can see all the expansions and contractions that I've listed here. Now we will be trying to use this to catch what we call, or be able to come out with chart patterns, and look how we can use these chart patterns to make profit when scalping on GBPJPY. So what's a chart pattern? You know, there's what we call bullish reversal chart patterns, bearish chart patterns, trend continuation chart patterns, and trend reversal chart patterns. So we'll start by looking at the very basic chart patterns. You have what we call the rising wedge, you have the falling wedge, you have the double top, the double bottom, and you have the whammy and the molar. So there are many of them. So we'll start by identifying all contractions in the market, and let's try to put up patterns in all these different contractions which we've spotted out. So let's see if, for example, we are in a downtrend like this. You see price is moving downwards. We'll try to look for patterns that give us trend continuation patterns. You have example a flag or ascending channel, rising wedge, all those bearish chart patterns. So let's start by how to draw these chart patterns. You see, we'll need to look for relative highs and relative lows on a very low time frame, and then spot a break of these relative highs and lows. Then we'll be able to get a chart pattern. So looking, for example, here, if you spot these relative lows here, and if you spot these relative highs, you've actually had a pattern. And this is, some people always call this a bearish flag, some will call this an ascending channel. Yes, an ascending channel in a low time frame, but it's really a bearish flag. It just went a bit longer than normal, and this is how an average bearish flag should be, or this is what we read, this is what we're taught that a bearish flag should be. So if you still see the long one, it's still a bearish flag. So this is a bearish flag, and we'll be spotting the break to the downside. So guys, let's try to spot these patterns everywhere. We spot the contractions, we spot the expansions, and we see how we can make money. So you started here, you saw the bearish flag, and this was the expansion from the bearish flag to the downside. You spotted the bullish, another bearish flag. This was the expansion to the downside. You see price entering a contraction, so you need to spot the break of the contraction by putting up a trend line, and let's use a support zone, a resistance level at this area here, like a rectangle. So draw up something like this up in this level. Seriously, it doesn't want to move. Okay, up in this level, so you have something like this which kind of broke to the downside, and then you gave you a trade. So this was a contraction, this was the expansion, then you saw price consolidating again, giving you another contraction. So we need to spot all the lows of the contraction, and then you get the expansion again to the downside. Then price started consolidating again, giving you a contraction. So we need to spot it like this. Now which chart pattern is this? Let's see, let's draw it up. And you have something like this which broke to the downside, we broke to the upside, sorry. It's not well drawn, but yeah, this is called an increase in volatility. This is a chart pattern called an increase in volatility. It still breaks to one particular direction, the upside, and when price, so this was the contraction, this is the expansion, then we enter another contraction again. Let's plot the pattern of the contraction. You have this, and you still have this, the same increase in volatility. You see, it's not different from the one down. Price is rather opening in the channel rather than closing up like this area here, or moving straight like this area here. It's rather expanding here and here, and it didn't move to the downside. Now every break of this pattern which you spot gives you a minimum of 20 pips. You have 30 pips, some you may have 10 pips, but it's rare. The minimum that I've seen so far is 20 pips. Let me look at the shortest break here. From here down here was over like 54 pips. That's a lot of pips. Just by spotting the break of this contraction, you'll be able to bank up over 54 pips. Let me look from here. If you're just able to spot the breaks of these contractions which you spotted here, you see there was one which started right from down here. Price was just contracting up onto this level here, contracted again, contracted just like this, and finally broke to the upside, and it gave us over like let's see, it gave us, let's calculate the number of pips there. Okay, this was over 80 or 90 pips, 90 pips there, and price contracted here and broke to the downside, contracted here again. How many pips did this contraction give us? It gave us over 96 pips. The next one gave us over like let's measure it to the downside. It gave us over 87 pips. The next one, let's measure it to the downside, gave us over 90 pips. The next one to the downside still gave us over like let's calculate, we still have about 50 pips. The next one which broke to the upside still gave us about 130 pips. This one was 50 pips, and you can keep spotting them. Let's drop a few and let's end for today. You just have this, and you have this broke to the upside, and let's see how many pips we got from here to here. We got over 90 pips again. So you see we're having an average of 90 pips. Price entered a very massive contraction here, which would have come out with a structure like this, a support level and a resistance level. This is a rectangle, clear rectangle, something like that. And price decided to break to the downside and moved over, let's calculate the number of pips. Price did move about, there was about 90 pips again. Price contracted here and gave us another pattern. I don't know if you could spot this pattern. Which pattern is this? This is actually a pennant. Let me draw it up like a pennant so that you see. Chart pattern, pennant. You can see the pennant. It broke to the downside and your entry was below structure, and you got over 70 pips straight into TP. You have price contracting again to the upside. You just want to spot the contraction here, and you you catch the break of that contraction, which was to the downside. This one went too far, went right down here about 200 pips, as well as there's a lot here. So presently in price, you're having this move. You need to spot the contraction, something like this, and price moving like this. Just need to spot the break like now, and then we know very well that during the Tokyo session, we will just have a move, maybe a move to the upside to where this resistance level is. This is how you trade chart patterns. For GJ, you can see the number of chart patterns which you've gotten, you see the breaks, and you see the move in price. Ciao guys, next time we will see how much we can make out of price.